Record low inventory and increasing demand. What does this mean for home prices going forward in 2023? I'm going to tell you about the tale of two real estate markets, because the more people listen to national averages and median price and this stuff, you're looking at the wrong data. You need to learn about the tale between two real estate markets. Stay tuned. I'll tell you about it. All right, Matt the Mortgage Guy, residential mortgage broker, licensed in 46 states now. Go to greatmortgagebroker.com, fill out the form if you want to get connected to me and my team. My goal here on the channel is to provide information, some boots on the ground that will help you in your real estate journey. Whether you're buying now, you're buying later, you're a real estate investor, you're a first-time home buyer, I really think the data is important, and I see it and know that if we're talking about something that's happening in the market right now in early April 2023, it's going to take mid-May before these numbers come out. Then people are going to analyze them. They're going to talk about it in their office. They're going to write an article. You'll be reading an article on May 20th that's really something that happened 6 weeks ago, dynamics in the market that happened 6 weeks ago. So this thought I have about the tale of two markets is more true than it's ever been. And quite simply, what I mean by that is you've got entry level that's absolutely on fire. Not in every single market, but most of them. Multiple offers, escalation clauses, above list. That's what's happening. Lower end, first-time home buyers. And then up in the luxury markets, in a lot of areas, 172 days on the market, 188 days on the market, $300,000 price reduction, $500,000 price reduction. Two very different real estate markets. So you can't look at the real estate market as a whole and say it's slowing, it's softer, it's declining. You can't also say it's rapidly appreciating either, right? Because you got to figure out where you're looking at. First-time home buyers make up about 2/3 of the business I'm doing. I'm doing business in multiple states, majority of it in California, Florida, Texas, Tennessee, and then the other, 42 states that we're licensed in. In these markets, if you're a first-time home buyer in Sacramento, California, and you're looking at something that's listed at 474, I can tell you, boots on the ground experience, I just got off the phone with an agent. We've got 11 offers. They're going to land somewhere between 515 and 520, the accepted offer. And so that's extremely competitive. I know that over the weekend, a half a dozen offers were written for clients of mine between 500 and 700 grand. Every single listing agent I talked to had multiple offers. One of the stats that my buddy Ryan Lundquist shared with us was of the homes that received 8+ offers or 10+ offers. I don't remember what the stat exactly was, but the vast majority of them, 91% or 92%, were sub 500,000. And so in this market where sub 500,000 means entry level, it's extremely, extremely competitive. And here's the projections moving forward, which unfortunately don't favor you if you're in this demographic. You're for a first-time home buyer looking to buy something at the entry-level price. We've got strong demand and low inventory. What that means for you as a buyer, there's not a lot to choose from. It also means that you've got more people bidding for these properties. It's very, very unlikely that you're going to be able to get seller concessions. It is crazy to me to think about. It was only 3 or 4 months ago where I was talking to buyers saying, go out there and get yourself a seller concession. Get yourself $15,000 in credit from the seller. Get yourself $20,000 in credit from the seller. Buy the rate down to the 2-1 buy down. All of that stuff was available. Some of it still is the right house with the right agent, right negotiating skills, but it's much less likely, much less prevalent than it was only a few short months ago. So be aware of that and don't find yourself looking at lagging data to make today's decisions. Meaning this dynamic that's happening in the market is going to reach, the press in 4 to 6 weeks from now. They're going to show lines out front of a house. They're going to talk to listing agents about 12 offers. If you're talking to professionals who are in the field, doing the work, talking to buyers, talking to sellers, talking to agents, talking to mortgage brokers, they know what the dynamics are right now. They're going to prepare you for better or for worse, and they're going to educate you. Here's what it takes in today's market. If you're ready for that, if you're willing to do that, if things, currently your finances, your job, your lifestyle, if all that aligns with being a home buyer in Q2 of 2023, great. If not, okay, let's find a way to get you prepared. From the data I'm seeing, the data I'm looking at, it's not getting better. We are at like anemic levels of inventory. And you look back 21 and 22, really low inventory, but it actually was increasing at a faster rate. And we saw more inventory building those 2 years than we see this year. If you look at this week from, call it last year, there was 82,000 new listings. And the latest data for the same week of this year, April of 23, there's 66,000 new listings. 16,000 of them resulted in immediate sales. What's that quick math? Like 25%-ish are selling right away. And so it's a competitive market. There's not a lot of inventory and demand is creeping up. It's different in different parts of the country. In California, we've got buyer programs coming out that's even fueling the demand even more. Upward pressure on prices. With rates trending down a little bit, that's putting upward pressure on demand. And so, unfortunately, I don't think it's getting any better. People that are holding their breath for a 20% decline in prices and 1% lower in interest rate, stop holding your breath, right? I've said it many times. Buying is when you're ready, not when the market's ready. Timing the market is impossible. And we all know that. Yet a lot of us still try to do it. Don't time the market, time your specific scenario. I'm financially ready. Here's a payment that's comfortable. I'm qualified. I'm ready to do it. Something I see myself living in for 5, 7, 8, 10 years plus. That's when you're ready to buy. So hopefully this was helpful. Let me know if you have any questions. Leave them in the comments below. Let me know what you're seeing in the cities you live in across the US. I'm always interested to hear what's going on across the country. There's probably 10 or 12 markets I've got a really intimate relationship with because we're doing deals day in and day out and talking to agents day in and day out. There's a lot of markets where I'm not analyzing the data on a daily basis. So I'd love to get your input. Thanks for watching. If there's other information on my channel that can help you out, know that there's 860 plus videos here, and here. If you want to connect with an agent in your area, go to homeandmoney.com/Matt. Thanks for watching.